Hello, everyone, and happy Monday. It's time for the Security Token Show. I hope everyone is having a good start to their week. And boy, do we have a doozy for you. You may be wondering, of course, why is it today instead of Friday? You might have missed us. Well, that's because we've been working our butts off on a very special report that we're going to go over today, as well as amazing other updates from the industry as per usual. So with that, let's get right into this special announcement.
5, 4, 3, 2, 1.
And as you can tell, I am on my own this week. Kyle is traveling and hopefully having a great time abroad. So I get the special treat of telling you everything that happened within the industry as we know it this year. First of all, before I even get into it, I need to give a huge shout out to the folks over at SteelWave Digital. They are pioneering in the tokenization of real estate, and we were able to present this report to you thanks to them. So we've included a Q&A interview for you to read up on them to see how this multi-billion-dollar CRE firm is shaking things up in Web3 within this report. But with that said, let's talk about the state of the tokenization industry 2024, the year of the RWA. So this report is now available, folks. You can go check it out. We'll put it in the comments and the links. It'll be all over our newsletters and socials. A good reason to be subscribing everywhere. But today I'm going to give you the big takeaways because it's over 70 pages. So there's a lot to get into that you can dig in across many different categories. But this by all means was a pivotal year for the tokenization industry. As someone who's been there from day one, I can tell you that we've seen the spotlight many times, but never did we see tokenization take off the launch pad, if you will, and go mainstream. 2018 had us buzzing about STOs, and NFTs started to inspire some new tokenization concepts. But the biggest activity in the past years have mostly been behind institutional walls and little inspiration for the industry until this year. So what changed? Well, several pivotal factors. For one, we've had 7+ years to finally put together a robust infrastructure of tokenization technology for assets to leverage and find distribution. But the things that really changed it all, BlackRock. Okay. Not only did CEO Larry Fink symbolize Wall Street adoption of crypto with his endorsement of Bitcoin ETFs earlier in the beginning of the year, but he validated tokenization with the launch of the BlackRock USD Institutional Digital Liquidity Fund, aka BIDL. And that was back in March of this year. Crucially, of course, powered by Securitize's technology, they actually also put that fund on Ethereum, which we'll get back to. Now, the biggest asset manager in the world is using tokenization. That's obviously a big deal. But the way it was revealed to the world, I think, is really what illustrates this new euphoria that the project brought to the industry, okay? Did BlackRock get to announce this fund the traditional way via press releases, careful language consideration? Nope. They didn't get the chance at all. It was crypto sleuths on Twitter that managed to find the smart contracts related to the offering before it was actually announced, and crypto Twitter went ablaze with the news. Next thing you know, BlackRock's wallet has hundreds of random coins sent to it via airdrops with the hopes, of course, of getting attention from anyone looking at the wallet address, but also perhaps of maybe BlackRock itself. And this is proof that the crypto industry and the crypto narrative has shifted, from nobody caring about tokenization into now this is the next big thing in blockchain, okay? This narrative has exploded in popularity under the term real-world assets, RWAs. And now we have numerous crypto utility tokens related to RWA companies that are trading in the hundreds of millions of dollars and some in the billions. And that is proof of that interest that crypto investors have and demand for exposure to this, huge trend that's coming. So that's a really, really, really big deal, okay? Crypto natives are now understanding and believing in the value of bringing real assets to DeFi and beyond. And while crypto goes gangbusters for RWAs, every asset manager and institution around the world is scratching their head and scrambling to figure out what the heck just happened with what BlackRock just did. And where BlackRock goes, the market follows. So I call this the perfect storm. No longer is the industry struggling to convince TradFi or crypto audiences that tokenization is the next big thing, because now they know that it is. So that leaves us with everything else that happened in the industry. But it goes without saying that Securitize and BlackRock deserve to be thanked by everyone who is building in the space because of what happened this year. So let's dive into some highlights, all right? Because I certainly can't cover all 18 topics that we cover in our research here. We're talking about roughly 400 service providers and issuers that can learn, you can learn about across tokenization platforms, marketplaces and brokers, institutional activity, the blockchain protocols, of course, fund tokenizations that happen, private companies and public equities that are being tokenized, bonds and debt, credit and lending, real estate, alternative assets, precious metals, DeFi platform activity, of course, global regulation and legislation that's changing and happening, custody, infrastructure providers, stablecoins, deposit tokens, CBDCs, and even third-party research reports. We've got it all in there, okay? Hopefully we didn't miss anything, but let us know, and let's get into some of these takeaways. The major activity of this year is, of course, surging from liquidity products. This category that we call liquidity products covers everything from treasuries funds or bills, money market funds, and liquidity products like BUIDL, which leverage other things like repos, CDs, among treasuries and the other sort of products. And this category is one that is already massive in TradFi as a cash management solution. It's a huge part of treasury and asset management, even more so when you can't instantly convert it because you need to rely on TradFi intermediaries. And this equation is simple. Would you rather have your money sitting idle as straight cash, or would you rather have it in a very low risk vehicle that provides a yield and is highly liquid so that you can get out and use it for other things relatively easily? And this concept is already being embraced by foundations and DAOs this year that went to diversify their treasury management, which is typically tied to the price and the performance of the underlying coin. So now that the coin can be swapped for real world yield and provide stable cash-based income, that's a huge relief that probably these managers operating these huge crypto treasuries can get. But of course, this is also a powerful settlement tool to directly between investments. Why ever move into cash when you can swap right into tokenized liquidity products to provide you yield? Due to high liquidity from these tokenizations, they are also being supported by prime brokers like we saw with FalconX and BUIDL, where the token can be posted for margin trading. And we've now seen products from Aberdeen, Franklin Templeton, Brevin Howard, Ondo, OpenEden, among, I think, over a dozen others. Heck, even Coinbase Asset Management is rumored to get into the game, and I'm later going to reveal that Ripple is also doing that. There is no sign of this category slowing down anytime soon, with the major threat being yield rates, of course, going down as the economic environment changes in the future. But nevertheless, the usefulness of this product is significant and presents a fundamental shift, in my opinion, for the future of finance. Okay, and there are a couple of other surging categories we should talk about. The first are tokenized public stocks, which I predict are going to be very successful, as we have seen already with the same business that FTX was operating before it collapsed. When that was happening, we saw millions of daily trades, sometimes for single tokens that were able to trade 24/7, which created unique arbitrage opportunities and trading mechanics. Now, Backed Finance, Denari Swarm, and other providers are hoping to revive this category back into its former thriving self. Another sector on the rise are tokenized bonds. Bond markets are already huge and also very dramatically in type, which is why we're seeing it, across all different use cases with large banks and institutions to smaller issuers like Microcapital doing multiple, with firms like Obligate also leading this charge. And finally, the sector that will see the next huge spike in growth will obviously, I think, for many who are in this space, be private credit. Now, private credit industry has grown massively in itself, TradFi, in the last few decades as banks fumbled it and private companies picked up the bag for lending against a variety of different yield-producing assets. And now this sector will offer investors who may now be buying liquidity products perhaps, or considering tokenization, they can now move down that risk curve and tap into higher yields that private credit provides. Numerous asset managers like Hamilton Lane have started to launch funds and another private credit around private credit, and this frenzy will continue as both TradFi and crypto, will seek to use these products thanks for the higher yield. So much more is, of course, happening in the space. Organic narratives like real estate continue to grow, as highlighted by the success of firms like Realty, Red Swan, Proppy, and many, many, many others, including new players like RE tokens and old school firms, as we mentioned earlier, like the official transition here with SteelWave and SteelWave Digital and their new $500 million digital fund. Meanwhile, on the infrastructure side, we see new blockchain protocols coming to market as layer ones and layer twos just for RWAs, only with the bigger already existing chains hiring dedicated tokenization leads now to sort of further invest and dedicate and support the RWA trend. Some, like Avalanche, have been very successful targeting institutional activity, and even Chainlink also recently launched a digital asset sandbox to support this. And let's not forget DeFi, where we saw Ondo become the most popular RWA to be tapped into by a variety of different applications on DeFi. And did you also know that Centrifuge earlier this year surpassed 500 million in TVL? That total value locked, funny enough, is crypto's way of saying assets under management. And numerous RWA firms are taking a firm stance to dedicate themselves to the DeFi industry, becoming the bridge for RWAs as their goal. Now, several more tokenization industry reports from the likes of McKinsey and others have been published this year, and we continue to see a bear case of 1 to 2 trillion by 2030, which targets going as high as 16 trillion. I personally believe it will be much higher by then, maybe double or triple. I don't know what it'll end up being, but what do you think? Go read our report. As you can see, we have a ton of intelligence in one area that you can go learn about and reference all the different articles that cover this stuff. But we would love to hear your thoughts once you do and come up with a good number. Let us know, post it on social media, Twitter, LinkedIn, tag us so we can see it. And then next week, we'll cover all the predictions that were sent in on the show, and we'll see what we can kind of get in this little public poll. But with that, that's our special announcement. We're so excited about this report. We really worked hard. Hopefully you love it. Please share it and send it around for anyone that you think might find use out of this report. And with that, now let's head into the rest of the industry news.
Thanks, Herwig. We are joined today by Arnab from STOKR and James from Blockstream. How are you both doing today?
How you doing, Jason? We're doing well.
Fantastic, fantastic. Lots of exciting news this week and this whole month, really, so far. But some exciting stuff that happened recently. You guys have the BMN1 token that has reached maturity. You guys are doing redemptions, and there's a new issuance as well for a second version of this, BMN2. Before diving into BMN2, let's break down the first one. Tell us a little bit about how it performed overall and kind of the value that it brought to your investors.
Hey Jason, thanks for having us. BMN1 has been a fantastic journey for not only for STOKR but also for Blockstream, but also for all the investors that invested in BMN1. BMN1 is a Blockstream Mining Note 1. That is the first note that has been issued by Blockstream back in 2021 that got matured this July 2024. BMN1 is a product that is backed by the Bitcoin mining hash rate. So in simple sense, BMN1 guaranteed a fixed hash rate for a period of 3 years, and whatever Bitcoin has in mined for a period of 3 years, minus the cost, has been sent out to the investor. At the time when the BMN matured, total of 1,012, it's a very interesting number, amount of Bitcoin has been paid out to so that's the claim for the investors. So that's the amount of BTC, which roughly equates to 80 million at the date of the payout. So during that time, if I consider that's one of the biggest payout in the entire real world asset tokenization space, that's a fantastic news for the entire industry, which we are working for years now. This product also has given a very interesting return. On dollar basis, BMN has provided a return of around 100%. That's the maximum return because BMN was issued into a number of tranches at different price point. The maximum return in dollar basis was 101% actually. And the interesting part is the Bitcoin basis return. So this product actually gave a 32% Bitcoin basis return for a period of 3 years. So in simple sense, it's outperformed Bitcoin. I don't know that many products in the market that actually provide or outperform Bitcoin in that sense, right? As the BMN did. BMN collectively has raised 40 million when it was issued in 2021, and it paid out roughly around 80 million. So it's like a 2x return in a 3-year period, in simple sense.
Really, really exciting. And you mentioned, it's one of the largest payouts in the space. Can you put a dollar value to that amount?
It's roughly 80 million in dollar value. Yes, at the time of the payout, so the product got matured on 6th of July 2024. At that time, the value of the AUM was that. And then Bitcoin price also went up. So I'm considering 66K price point of the BTC, because the underlying payout was all denominated in the BTC and all paid out in BTC actually.
Makes sense. And this is one of those products where it is an alternative asset, right? I think something that a lot of people want access to. And we did notice there was a high price to participate into the Blockstream Mining Note. How are you guys, including other investors, maybe at smaller ticket amounts, to be able to also participate in such great returns?
So BMN1 was issued to professional investors back in the days. You could trade a smaller denomination size of 0.02. It was divisible into small decimal point. But the primary issuance was done for professional investors, and the minimum ticket size was 200,000. It was quite steep, and that was an interesting market momentum where we also got a lot of interest. BMN2, now the product that we will discuss further, actually made it more accessible. If you may, I can just give a more kind of clarification on that point. BMN2 now can be accessed with a smaller ticket. So the minimum investment is 115,000, 115,000 US dollar. But if you are a professional investor, and we have a broker dealer that is doing the qualification for professional investor, if you are qualified as a professional investor, you can invest as low as $10,000. That makes it more accessible. Also, in the past, we also made it accessible. The BMN1 was also made accessible to different exchanges. It was traded on Bitfinex Securities. It was traded on Merge. There was also peer-to-peer swaps people are doing on SiteSwap. And on those exchanges, they also have their own regulatory regime where they can make it much more smaller ticket size or much more accessible in a fractional way.
Makes sense. And we've been tracking those on stm.co. So excited for when BMN2 hits the secondary markets as well. And glad that you brought up BMN2. It's new issuance, right? So for interested investors, how can they learn more at 1 and 2? For BMN1 investors that maybe have not redeemed yet, how can they also participate in BMN2?
So BMN1, just if you want to know about the return on the BMN1, there is a report which we have published a few months back. We can put the link over here and you can access that. Also, you can also go to STOKR page and you can also download that. It's on the top bar. For the BMN2, investors can subscribe with dollar, with Bitcoin, with Tether, but also with BMN1. When they subscribe with BMN1, that's actually the rollover. And any investor who are holding BMN1 and want to roll over to BMN2, they also get a significant bonus. It's around 3% bonus they're getting in that way. So they can simply, and on STOKR, it's very automatized. You just go there, connect your account and the wallet, invest with the BMN1 and automatically subscribe for the BMN2. And BMN1 is actually, what is underlying BMN1 is the Bitcoin actually, right? And the Bitcoin price has a dollar basis and it changes every second or every minute, right? So when you're investing based on what is the dollar spot price of BTC to USD, your price gets adjusted with the BMN2 and that's how you subscribe the BMN2.
Got it. Okay, cool. So anyone in BMN1 that really profited from this, they might be, doubling down and whatnot. James, let's shift over to you. Let's talk about, the underlying asset here, right? Which is mining of Bitcoin. Tell us a little bit about how BMN2 differs from BMN1 in terms of, what's backing it and what you're seeing in terms of, hash price, for example.
Sure. Well, BMN2, similar to BMN1, this is a simple way to get into mining. And mining is been, depending what units miners you use, it's more profitable than just buying Bitcoin outright. So the BMN2, the market has matured quite a bit since we did BMN1. It introduced what is known as hash price. So if you look at historical hash price, I don't know if you could bring up that slide, Jason. Historical hash price is at its low right now. But it's been up above 400 at one point. So we are expecting BTC price to go on a bull run, and we would hope to see that the hash price would go up a few hundred dollars per hash, per petahash per day in the near future. Recently, we've seen what happened in Japan, right? Them giving out basically free loans, and then pulling back on that has hurt the market. So you see the BTC price drop following the market. We're expecting that to recover fairly quickly, right? And see the hash price go back up to where it has been over the last few weeks. The BMN2, we'll be offering a hash price of 61.64, which is a slight premium over what the hash price has been over the last few weeks. The difference is this is for a 4-year term. If you look at buying a hash contract on the market, hash contracts usually are about 6 months in length. Rarely do you see something go over 6 months. So you're locked in at that hash price for that period of time. You see nothing that goes out 4 years. So BMN2 is a very unique product, and it's an easy way to get into mining. So we're excited about this offering and hoping that people will jump on it.
Very cool. No, and I appreciate that explanation too. So do you think that, as public markets are kind of, in the downturn right now, as you mentioned, due to the Nikkei and so forth, how does Bitcoin kind of offer, investors, some kind of hedge or edge into, their returns in general? And of course, as we've talked about repeatedly here, BMN2, has the potential to perform as well as BMN1 did. But tell us a little bit about Bitcoin versus public markets and so forth.
All right. Well, we've seen the Bitcoin price kind of correlate a bit to the market, right? So people putting in money and pulling out money when times are good and bad. We're seeing that now as well. But Bitcoin has generally been a hedge against inflation, and we've seen a lot of inflation recently. So it is a store of value, and we'd love to see it keep going up and more people being educated on really what holding Bitcoin means against just holding the dollar or just standard currency.
Got it. And there have been other products related to Bitcoin mining. We've seen Hashrate Asset Group also, have a similar product. But for you guys, for Blockstream, I also saw the Blockstream ASIC note, basic, that we kind of track on STM as well. Wanted to touch on maybe a little bit on that and the difference between the Blockstream Mining Note and the basic.
Well, the Blockstream basic note is really to arbitrage what we feel the low prices in the ASICs have been over the last year and a half, right? All the people funding or lending against ASICs, when that kind of come down and crash, it kind of put a lot of ASICs in the market, and all lending went away. Right, and also at the same time, there is no capacity to deploy stuff. So we have a lot of ASICs sitting in the closet, and it got devalued tremendously. So right now, the manufacturers, Bitmain and MicroBT, they're producing miners just about cost. So it really can't go down any lower. So we are expecting that the ASIC prices to rebound and start correlating again against the profitability of mining. So when we started the ASIC fund, it was a 24-month fund, and we didn't expect it to recover, to yield anything this early. But we are expecting it as soon as we see a run on Bitcoin price.
Interesting.
I think if I may add one interesting thing, what James just mentioned, just to add to that, Basic has a very interesting fee model. So as a fund manager, the fund manager can only charge a performance fee if there is a Bitcoin basis return in that product, right? So even if the Bitcoin price increases in dollar value significantly, there is no performance fee payable. It's only payable in that way if there is a Bitcoin accumulation is increasing, right? Or the Bitcoin accumulation number. And the two product, how it's interestingly different is the BMN actually provides a different price point of Bitcoin accumulation, because when you're investing in a hash rate or a hash rate product, you actually have a different volatile product. So because we did a very interesting projection actually, and that's also in the BMN2 pitch deck, the BMN2 or the hash rate product actually can enable you with a lower volatile asset class compared to Bitcoin, because Bitcoin price volatility has a significant volatility angle compared to a hash rate volatility.
Exactly. So you have some downside protection buying BMN2 as opposed to buying Bitcoin directly.
Exactly. And the basic on the other side is different. It's more like a distressed asset fund, which was kind of an opportunistic kind of arbitrage opportunity that came in because of all the bankruptcies and all this kind of thing that we see after FTX, and the ASIC price went all-time low. So the dollar per terahash was kind of around $15 per terahash, James, right, when the fund was set up. Right.
Exactly. You had back, I guess, in December 2021 or early 2022, ASIC prices were, I think they went up as high as $120 per terahash. The same machines right now are sitting below 8. So it's a significant difference in cost. And we do, and historically, the ASIC prices have always correlated against the Bitcoin price. But since the last crypto winter, where there's lack of capacity, lack of funding, oversupply of ASICs in the market because of lack of capacity, it created like the perfect storm to keep the prices low. And as these things correct themselves, we expect to see the ASIC prices rebound and start correlating again against the Bitcoin price.
Gotcha. All right. Well, we're tracking, the basic as well on STM. So, hopefully we see that trend coming right back up on the graph. But yeah, some key stats then from today. You have 1,212 Bitcoin mined from the BMN1. You guys have paid out $18 million worth of a payout to your existing investors. Remind us what that amount is in Bitcoin.
Bitcoin was 1212, so 1,212. Right. That will be 80 million worth of BTC.
Right. And Jason, I want to add something else in regards to BMN2. If you compare BMN2 to mining directly, you don't. When you purchase a mining contract, you're locked into a contract, and you have to deal with curtailment of energy, you have to deal with machine failures, and so on. Those type of protections are built into the BMN2 already to a point, and you also have a fungible financial instrument, so you're not locked in. If you want to trade the token on the secondary markets, you can. So that's a huge difference. So it's a way you can mine with liquidity.
Yeah, no, exactly right. You get some of that upside on the performance, and you get to at least bail out maybe on a portion of your position if you need to invest in something else, or you just for whatever reason need some cash on hand. So really exciting. With all this in mind, we've also seen other assets, by the way, start integrating into, for example, being used as collateral and whatnot. So adding utility to these assets. Are there any plans for that for Blockstream Mining Note or any of the Blockstream products?
I think I can give a little bit on the Bitcoin mining note or the BMN in that specific sense. We see the growth of Bitcoin-based collateralized borrowing lending quite a lot, right? And BMN is in certain way is Bitcoin proxy, because underneath value of BMN is whatever the Bitcoin has been mined or whatever expected to be mined in the period of 4 years, because BMN2 is now a 4-year product, right? So in that way, I think anybody who is giving borrowing lending against Bitcoin as collateral can also take BMN as an asset class, right? We saw some interest in those things in the BMN1 phase. Also, BMN1, we saw also quite an interesting liquidity angle, right? That mitigated a lot of liquidity question, because the BMN, we did some analysis after the maturity, over 20 million worth of BMN has been traded. Imagine that's the total AUM at the maturity was 80 million, 20 million was a substantial. I'm not aware about in the market some similar securities token have been traded at that volume at this stage, what BMN has been traded, right? So I would say for the entire market, BMN1 is one of the flagship product, because it's not only a private asset, it is also provide an outperform Bitcoin, issued on a Bitcoin layer 2, and you can actually hold in your Bitcoin wallet in the same asset because it's issued on the liquid network. Every transaction is confidential, so you do not have a third party who can front run in the trades. That's a significant advantage when we talk about the financial market. Issued from a Luxembourg securitization vehicle, which is a very institutional grade vehicle with an ISIN number. So this is kind of a regulated securities. So we saw a lot of family offices, institutional investors, and high net worth investors who have participated in the offering. So a lot of things have been achieved in BMN1, and also there are a lot of initiatives we saw in the hash rate product. But the BMN, the volume that BMN has achieved in the first series itself, I think it was quite significant. And if we can keep the same track record and being the Blockstream has a very strong brand reputation, I think we can even increase the AUM in BMN2 significantly this year.
And Jason, another difference with BMN1 and BMN2, BMN1 was never offered to the U.S. market, and we're expecting BMN2 through another series to be offered in the U.S. market, which is
okay. Well, that's good. That's great to hear more growth, and of course, we walk before we run. So great to see that the BMN1 did very well and it justified the BMN2, especially expanding as well to other investors. Appreciate both of you coming on. This was great insights. Absolutely. We'll be transitioning on to the next section of the show.
Thank you.
Thank you.
You're just getting better and better at those interviews, Jason. And thank you to Arnab from STOKR and James from Blockstream for coming on the show. That's incredible stuff. What a performance from BMN1. Makes a total sense to keep going on that success for the second note here. And I'm excited to see the demand from the industry. It's not every day you get to see a 50 million, roughly, 800 plus Bitcoin dividend like we just saw. And also last week, to keep going on the news here, Biddle did a dividend themselves. Actually, their usual monthly distribution, now 2 million, bringing the total since inception to around 7 million. So you just love to see RWA investors making money, folks. I think that's what gets the industry active. That's what gets investors more and more excited about RWA. So more news here. Ripple made big headlines with OpenEden when they announced they're allocating $10 million to OpenEden's tokenized T-bills. So this marks the first liquidity products, as we call them, on Ripple's XRP ledger through OpenEden. And Ripple also announced that they're creating a fund to invest in more of these products. So that marks yet another entrant into this market, just as we talked about Coinbase Asset Management last week. And also we saw UBX announced a new real estate tokenization initiative in its home location of Dubai. You'll have to buy these real estate RWAs using the UBX tokens. And beyond that, I can't share more on the information on the offering at this time. But we also saw news from heavyweights Franklin Templeton and SBI Holdings out of Japan for a joint venture to bring FT's suite of tokenized investment products to the Japanese market through SBI as a channel partner, specifically citing that they're targeting younger investors who align with the benefits of tokenization technology. And this is a perfect example of how U.S. asset managers and otherwise can more easily tap into other geographies through digital platforms using local investment banks to make all of this possible. And of course, grow AUM. And another partnership was also announced to highlight this between Archax and eToro. This marriage between the UK and the USA is a sign of global distribution expansion. Each firm can now tap into their own products and share them with the investors on the other's platforms. I think it's a brilliant way to grow both an investor base and product base for two marketplaces at the same time. And I'm looking forward to seeing the first ones that start to make that cross. And on the industry side of things, the Association for Financial Markets in Europe, or the AFME, published a paper around one of their 5 pillars, which is digital assets and specifically tokenization. The report highlights regulatory issues affecting tokenization relating to central securities depositories, which of course questionably kind of become redundant for tokenized securities, despite the legal requirements for them to be used for listed securities and collateral eligibility, including for European Central Bank collateral. So this is similar to the issue that we see in the US of needing a transfer agent for some registrations and specific listings. It's also similar, only as a license to attach to what is already essentially an automated securities management solution thanks to tokenization. So we'll see how the regulation develops on that front, but it's good to see advocacy for that. And regarding the DLT pilot regime, AFME also credited its efforts, but it's worth pointing out that they said that no approved DLT platforms since it went live in March of 2023 have happened. So, it references issues raised by many other banks, ISMA, and others, including the volume restrictions and uncertain timeframes discouraging its use. And similarly, the Bank of England has released its blueprint for maintaining agility in the rapidly evolving payments landscape. The central bank cited tokenization, stablecoins, and CBDCs as key forces shaping the future of payments. It's a beautiful 40-plus page roadmap guide that's absolutely worth the read if you are looking and researching this topic. And that's all the news I have for you until Friday, so you won't be waiting that long. There's a whole lot more happening this week. And of course, we do have a Company of the Week to announce. And this is the part of the show for those of you who do not know where we pick, and I say we because normally my co-host Kyle is with me here. We each get to pick a winner. So this week it'll just be me. And that winner is for what we think, or I think in this case, was the company that really deserves the spotlight to be highlighted for making the biggest moves in the space. And so that also puts them in the running for potentially Company of the Year. At the end of the year, we see everybody that won. They'll potentially be put in for as an entry to win the whole thing. And that is now potentially could be OpenEden, because I'm going to give it to them for partnering up essentially with Ripple. It's a huge sign of faith and trust to be selected by Ripple to be the first liquidity product, in this case, US Treasuries on Ripple's XRP ledger. That comes with a $10 million allocation for OpenEden's, marketplace, essentially, as well as we saw that Ripple is going to kind of build off of this and grow into the space. So congratulations. It's a huge deal. It's making a lot of waves all around the industry that Ripple is now getting very active. And they're putting their money where their mouth is, if you will, with OpenEden being their choice. So congratulations. You're my Company of the Week. And with that, that's the show, everybody. Hopefully we'll catch you again on Friday this week for another amazing security token show. I'm sure there's going to be a lot happening already this week. But meanwhile, go check out that report that we released. And of course, give us a follow, subscribe, share. It really helps us going. And check out stm.co for all of your latest trading needs, Security Token Prime for all of our other research and reports. And of course, hopefully, if you have any questions or feedback, send it our way. And I'll catch you again on Friday. And meanwhile, happy tokenizing.